This video will give you a full overview of how to use Float to forecast your cash and understand what the future looks like for your business. Float is software that integrates with Xero, Quickbooks Online and FreeAgent to help you build really visual cash flow forecasts based on your predictions and data imported from your accounting software. We then automatically keep your forecasts up to date. Some people ask us whether we pull in their balance sheet and their profit and loss to create a forecast. The short answer is no. What we do is more straightforward and accurate. We build your forecast based on the payment dates of invoices and bills in your accounting software, as well as the assumptions that you enter into Float. This means that Float will reflect whether you've actually been paid, rather than showing you as having cash when it hasn't been paid yet. In order to use Float, you do need to either use Xero, QuickBooks Online or FreeAgent as your accounting software. Jumping into Float, I'll start with our Overview tab. This page will give you a really clear snapshot of the short-term cash, as you can see from this graph. It will also give you prompts that can help you bring the data in your Float account up to date. This panel will alert us to any overdue bills that need to be updated, and the second panel is alerting us to any invoices that need to be chased. Clicking on these panels will take you to the Bills to Pay tab or the Invoices Due tab, where you can update your expected payment dates or even exclude any bills or invoices that you don't want to factor into your forecast. We'll go over these tabs in more detail later on, but the reason these panels are really important is because when you have invoices or bills that are past their expected payment date, Float doesn't know where to allocate that cash to, so it defaults to showing it as hitting your account today. Updating these bills and invoices to when you think they will actually get paid will give you a much more accurate forecast. If you're a Xero user, then this next panel will alert you to the number of unreconciled items in Xero. Clicking this will take you to Xero where you can do that reconciliation. If you have a lot of unreconciled items in your accounting software, then your forecast could be inaccurate, as we won't be able to show bills and invoices as paid until they've been reconciled. In QuickBooks, this is known as matching, and it works the exact same way. So make sure you keep that reconciliation or matching up to date. This next section will show you how your budgets are progressing throughout the month. And finally, this graph tells us the net cash movement over the past few months and what's likely to happen in the next month. Moving over to the cash flow tab, I'll start where it says total reconciled balance. If you're on QuickBooks, then this will say total matched cash. This lets you know how much cash is in the business right now up until the last time that you reconciled or matched your latest transactions in your accounting software. If this number ever looks incorrect, make sure that your reconciliation or matching in your accounting software is up to date and check which bank accounts are included. As I mentioned earlier, it's important to note that if you have anything that's still waiting to be reconciled or matched in your accounting software, then we won't be able to show it as paid in Float. Here you can set a threshold where you'd like to be alerted if your cash will fall below a certain amount. If you have an overdraft or a line of credit, you can set this to be a negative number. If we put in minus 5,000, we can see when our cash might fall below that amount in the future. The next thing to have a quick look at is the bank accounts that we're including. Here you can choose which bank accounts or credit cards that you'd like to include in the forecast. If you do choose to include credit cards, then every transaction made by that credit card will pull through, but repayments won't. However, if you unselect your credit cards, all you'll see from them is the repayments that you make to them in your bank transfers row. Here you can see the last time that we updated from your accounting software. That happens every 24 hours automatically, but if you've just made a change, you can update manually by clicking this button. Next, we'll take a look at the cash flow graph. This graph shows you all the cash moving in and out of your business. You can go back into the past and forward into the future. These arrows allow you to move up to 3 years ahead. The blue line is your cash balance, which is a combination of all the bank accounts and credit cards that you've included. It's made up of the cash budgets that get entered into Float, as well as the expected payment dates on upcoming invoices and bills. You can view the line on a daily, weekly, or monthly basis, but the daily view gives you much more detail and shows you all the ups and downs in the coming weeks and months. You can look back at the last 3 months historically, which grows up to a rolling 6 months once you've started using Float for 3 or more months. Hovering your mouse over the line shows you your day-by-day bank balance. If you switch over to Budget Progress, you'll see these green and red bars, which correspond to your total cash in and cash out in past months, red for cash out and green for cash in. And in the current and future months, you'll see unpaid invoices and bills in the middle green and red shades. The lighter bars surrounding these are your total budgets or forecasts, so you can see in the past how accurate your forecasting has been. Next, you need to take a look at the upcoming invoices and bills in the Bills to Pay and Invoices Due tabs. Float is one of the only cash flow tools that imports all individual invoices and bills from your accounting software to automatically populate your forecasts, making it ideal for short-term planning. But because of this, you do need to go to the Invoices Due and the Bills to Pay tabs to ensure that the payment dates are accurate. So you can see we've got a couple of notifications here letting us know that we have overdue invoices and bills. If we look at invoices due, we can see this graph showing us when we're expecting cash payments in, and if there's a red bar, that lets you know that you have overdue cash expected today. I can see that I have 10 outstanding invoices, so invoices that have not yet been paid and reconciled or matched. Then I have 7 overdue invoices, so those ones are past their due date. And then of those, I have 4 that are past their expected payment date, so invoices that are past the date that you thought that they would be paid on. As you can see, there's a difference between the due dates and the expected dates. The due date comes from your accounting software and can't be changed, but the expected date can be updated in Float. And you want that to be updated to when you think the cash will enter or leave the bank account. So these invoices that are past their expected dates are causing inaccuracies in my cash flow because Float assumes that they are payable today. So if there are any invoices past their expected dates that aren't going to get paid today, you could have an inaccurate forecast. To fix that, you can change your expected payment dates. You can see here the original due dates coming in from the accounting software. To the left, you can see the expected payment dates. If you're a Xero user who sets expected dates on invoices, we do pull those through to Float. If you want them to be in both Float and Xero, then update them in Xero first and run a sync with Float. Because Float is cash-based, you need to project when invoices and bills will actually be paid rather than when they'll hit your P&L. This will then show you an accurate picture of how much cash you'll actually have in the future. For instance, let's imagine this client, City Limousines, has promised to pay all of their outstanding invoices by the end of this month. I'll search for their invoices and then update the expected payment dates for all of them. You can do that by selecting the ones you want and then go into Batch Actions and then Set Expected Date. Here you can choose to add a number of days onto all of their due dates or pick a specific date. For now, I'm going to pick a specific date at the end of the month. You can also do this individually and use one of these quick options to move an outstanding invoice or bill to the future. For this invoice, I know the client is bad at paying us and I'm just really not sure when they'll pay. So I'm going to exclude that from my cash flow for now. I can always re-include it and it won't be deleted in the accounting software at all, it will just not factor it into the forecast. You can also use the search bar if you have a lot to sort through. Once these invoices and bills get paid and reconciled or matched, then they'll automatically be removed from this area. In case you're wondering, all these changes only happen in Float, so we don't push any data back into your accounting software. And we do update from your accounting software automatically every 24 hours, and you can see the last time this happened up here. These same rules also apply to the bills to pay section. So you or the person who deals with collections in the business needs to regularly go through all of the invoices that are due and bills that are owed and update them with a realistic expected payment date. But not every transaction will be related to a bill or an invoice, and that's where the forecasting comes in. Your cash flow table includes all the information about your business's cash. It contains all your historic transactions as long as they've been matched or reconciled, information about all the bills and invoices that you have due, and your forecasts that aren't necessarily tied to an invoice or a bill. We group your chart of accounts lines into cash in and cash out. We also have net cash movement at the end. If there are any lines here that you think might be missing, you can go to the Manage Table layout to add it in like this. Here you can also group accounts together, so we might want to group our office costs or cost of goods into one group. I'll create an office cost group and add a few lines in. And when we get back to the table, we can now see that the group appears here. You can go back into past months here and click on them to see what has been spent and received as well as how much of the cash budget was paid. You can click into each invoice or bill to see all of the detail, which is one of the reasons why Float is much more reliable and insightful than a spreadsheet-based forecast. What you need to do is create forecasts for each of these accounts in each month that you expect cash to move. Once it's all set up, we then automatically update your forecast with invoices and bills from your accounting software, so you can track progress towards or beyond your forecasts really easily and efficiently. It's important to note that forecasts in Float act like empty placeholders that fill up with invoices, bills, and transactions from your accounting software as the month goes on, so nothing gets double counted. There are two ways to forecast in Float. Firstly, if you have several individual cash budgets to enter into one month, you can do that by clicking into the cell. I'll show you our sales this month. You can see I have several cash budgets entered in. These are all for the dates that I expect this cash to be received. So let's add another one to show you how it works. We want to put the total figure of cash that we expect to receive including tax, and we'll put the date for when we actually expect to be paid, so this is different to accruals budgeting. A cash flow forecast shows your cash movement for when you will actually spend and receive money, which makes it a lot more realistic. So I'll set this to be all future months. You can also set this to be weekly, bi-weekly, monthly, quarterly, or annual. And you can choose which date the budget starts and ends here. A little known feature that we also have is the ability to forecast an average using this little calculator icon. It will look at the last 3 months and give you a historic average of the past actuals. If things change and you'd like to ignore or change one of your budgets, perhaps the client paid early or for a different amount, or they're paying later than you thought, you can just click in and you'll see this view for each budget. This lets you view that budget each month and will allow you to make changes all in one place. Here you can change the value and the date, and if you want to delete or ignore a budget for some months or weeks but not others, you can do that here individually. Or you can do it in bulk up here. At the end of the month though, we'll always take the actual as what really happened, but you can refer back to see what your budgets were in the past. Remember that Float doesn't automatically calculate your tax for you due to the large variety of different tax rules and regulations around the world. All cash comes into Float inclusive of tax. So if you pay VAT, GST, HST, sales tax, or corporation tax, you'll need to enter those as forecasts as well. So you can see in my VAT line, I've already got a quarterly budget worked out. To do that, I clicked into the cell, clicked Create Budget, and chose the quarterly option and put in the figure. This is a placeholder, but we can always update it if it changes nearer the time. The second way to enter cash budgets is to use this button called Spreadsheet Input. This is really useful if you have a forecast worked out in a spreadsheet and you want to copy and paste it into Float. For instance, you might have a P&L budget already in Xero or Quickbooks. You can't have that synced directly to Float because it's on an accruals basis and Float is cash-based. However, you can export that to a spreadsheet from your accounting software, update it to make it cash-based, and then copy it into Float. So I'll go to this spreadsheet that I've been working on and just copy each line into Float. So I'll copy my expected sales in here as an example. To do that, just use your keyboard shortcuts Ctrl+C and Ctrl+V to paste it straight in. You can also type in different amounts into each cell and move around easily with your arrows or tab key, and you can copy a forecast forwards to the right like a spreadsheet. The one thing is that with this method you don't get as much granularity on date setting or individual budgets within the month as you do by clicking into each cell and entering the budgets one by one, but it definitely can be a good place to get started. Once you've spent some time setting your cash budgets, you'll be able to get an accurate view of your cash flow over the coming months, which will help you make those key business decisions. Sometimes you'll want to model different hypothetical situations to help you make better decisions for your business. Our scenarios feature helps you to really easily and visually understand the cash impact of different potential futures. For example, I have a couple of scenarios here that I made already. One for losing a big client and one for hiring new staff. You can see that losing the 4 seasons would have quite an impact on our cash flow, and that hiring a new staff member would initially lead to a dip in cash, but the sales they'll hopefully bring in will make the investment pay off a few months down the line. So initially you'll be looking at your base or your official forecast, but we can add a scenario layer to see what might happen if we wanted to, say, expand to a new location. You might also do a scenario for increased or decreased sales, or if a project falls through, or if you get paid late, or any number of scenarios. So you would just click Add a new scenario layer, enter the name, and choose the colour. To reflect expanding to a new location, I'll just add a new cash budget on top of the existing one for rent. So I'll add 3,000 more here each month. Now you can see that the rent row has turned the same colour as the scenario, and my cash budgets are updated in all future months. I'd also expect our sales to increase as a result, so I'll update that too. Scrolling back up, we can now see the impact if we expanded here. Working with scenarios will help you to understand how different situations will affect your cash, which is a crucial part of business planning. If you're looking to keep a close eye on the cash, you can go to the Daily Breakdown tab to see a short-term graph where you can set the date range. This can be anything from the next day up to the next 3 years, but I find that looking at the next couple of weeks is the most useful. Below the graph, you can see a list of the upcoming incomings, outgoings, and budgets ordered by date, as well as how they affect the bank balance, almost like a bank statement for the future. However, you can also go back into the past to see what has been spent and received as well. You may be wondering what the budget remaining bits mean. This is because the way the budgeting works in Float, budgets act like empty placeholders that then fill up with invoices, bills, transactions as the month goes on, so nothing ever double counts. That's why you see budget remaining amounts rather than total budgets, as a portion of that budget has already been taken up with an invoice, bill, or actual transaction. For instance, if we had a $10,000 sales budget and $4,000 came in towards sales, then we'd have $6,000 remaining until that month ends. Float's main report lives in the Cashflow tab. If you click this downward arrow button, you can export your forecast to a CSV or a PDF. Let's choose PDF because it's a bit more visual, and give it a second to download. So you can see you've got the graph with the scenario that you're looking at the time, and then on the next page you have the summary of cash in and cash out, and then you have the full breakdown of what has happened in the past 3 months and what's going to happen in the future. But for some more detailed reports, just head over to our Insights tab. The budget variance report will tell you how accurate your budgeting has been in the past month or past 3 months. We also have a few more reports here that should give you greater insight into your budgeting. These two at the top will alert you to the top 4 categories or accounts that were most over or under budget, and you can then click into each one to revise those budgets. And this report will let you layer multiple scenarios on top of one another and set your date range to be anything from 1 day up to 3 years. And this report will show you your budgets, actuals, and invoices and bills at a really high level, green for cash in and red for cash out. If you have any questions at all, just send us a message via the in-app support chat icon here or to support@floatapp.com. We'll aim to get back to you as soon as we can, but our response isn't always immediate, so you can leave your question, close the tab, and we will get back to you by email. That's it. If you have any questions, you can always get in touch with us. We'll be happy to help in any way we can. Happy forecasting!